to talk about here. I got to go live to the trading desk right now. Victor Adair awaits me right now. Victor, interesting talk with Paul Beattie, singing one of the themes that we've been on, which is, of course, the U.S. dollar, and it continued to rally against virtually every other currency this week. What was it, a 13-year high?
Yeah, we did hit a 13-year high. We've been up about 13 of the last 14 days. I think the U.S. dollar index is up 6% from the overnight lows it made on election night. It's up 10% from the lows it had in May, the very beginning of May. And by the way, that was exactly the same day that the Canadian dollar made its high for the year. You know, when I talk about Canada, I often say it's got nothing to do with Canada. It's about the States, you know, just a different way to look at it. But, yeah, the U.S. dollar has continued to be strong. We've got the Chinese currency at an 8-year low. It's dropped 15%, say, in the last 3 years. And the Japanese yen is down 11% just since election night. So there's been huge moves in the currency market. But if you want to put it in a nutshell, you could say it's the U.S. dollar going up.
Vic, let me come back to, I just want to make sure we get all of these things. U.S. dollar also plays a part, and that's how we are measuring gold prices in U.S. dollars usually. Man, that certainly has continued to fall.
Yeah, the gold market, had a tremendous run the first half of this year. It had hit a 6-year low in December of last year. Rallied and it reached its high for the year right after Brexit, okay? And that was exactly, again, the same time that interest rates all over the world were really low, historic lows, had $12 trillion worth of negative yielding sovereign bonds. That was the time when real interest rates were really low. Since then, gold's down $200. Gold is down $160 from the highs it made on election night. So you have a surging U.S. dollar, rising interest rates, and a rising stock market, I should include there. That's just not a good environment for gold.
Okay, I got to go to one area that maybe most people aren't aware of, and that's the incredible performance of copper.
Yeah, copper market, and I heard Paul talking about zinc and that. Copper market has jumped 28% here in the last 5 weeks. It's at about an 18-month high. And to put a dollar figure on it, that's about $2.50 US a pound for copper. Copper, however, back in 2011 at the top of the commodity boom was trading at $4.50. So it fell all the way down to below $2 earlier this year. So we've had this rally. I have to think that the rally in copper is very tied to the base metal rallies that we've had in China. Zinc prices are up, copper prices are up, other base metal prices are up, and I think one of the simple reasons is with the Chinese currency going down, a lot of people in China are looking around, how do I protect myself? And they've been going out and buying things. Last year they were buying the stock market, they were into the real estate market. Well, they've just gunned base metal prices higher. The speculative positions in copper are off the chart. The market's overbought. Doesn't mean it's not going to go higher, but, volatility could be nasty coming up in the base metals.
That's the question I have for the rest of the markets, though, that you just alluded to gold. We alluded to the U.S. dollar, for example. We could have talked stocks. It's pretty straightforward what's happened there. Do you think this kind of action is overdone, though?
Yeah, since the election, we've had these spectacular moves, okay? And let me just give you one. I said that the bond yields in post-Brexit time were at all-time lows. Well, interest rates have been rising fast. The 10-year at post-Brexit was about 1.25. Now it's about 2.3. David Rosenberg, who I pay attention to, is pointing out that the relative strength index on the bond market is at a 43-year low. In other words, it's fallen so far, so fast. In his view, it's overdone. I think there's a bit of that across the markets, but I think longer term, U.S. dollar goes higher. Interest rates go higher, and stock markets likely go higher. From the short-term trading perspective, I'm actually fading at this moment the real sharp drop in the bonds. I do not want to be short stocks. We've got some short positions on in gold, and the thing that I've really been sort of adding here is my short positions in Canada, the Canadian dollar, that is. Canada has done better against most of the currencies around the world because it's been tied to crude oil, which has bubbled up a little bit here the last couple of weeks. We've got this big meeting coming up November 30th in Vienna with the OPEC people. If they do not come up with a believable cutback, crude oil prices are going to go lower, and that makes Canada vulnerable.
Well, there's going to be lots to talk about next week too. We've got the election in Austria. We got the referendum in Italy on the 4th. Lots of stuff going on. And I'm glad you'll be there to help sort it through for us.
Okay, thanks, Mike.